we're here on the line with Mr. Thibaut Lepouttre of the Caesars Report. He's a Belgian native, and he covers the market from the economic standpoint. He writes the Caesars Report, covers the mining sector quite extensively. And as you folks know, we were talking about the eurozone back at PDAC, which was during I think it was in March, correct?
That's correct, Sonny. That's correct.
And so we're talking about several things in the eurozone, and specifically actually Ukraine, which is still having its issues till this day. And
No kidding.
yeah, it's been it's been unfortunate, but want to get an update from you, see what your thoughts are on the eurozone. Thanks a lot for joining me today, Thibaut.
Oh, you're very welcome, Sonny. I'm glad that you have me.
Thank you. So what since we last spoke, you said that the retail and institutional investor sentiment back then was actually quite optimistic, and you laid out several reasons. For example, even there was an equity raise for a Belgian mining fund, from what you described.
A French one. A French one. Yeah.
Sorry, a French one. My mistake. So what has changed since then? Is the sentiment still optimistic, or shed some light there?
Well, I indeed think that the sentiment is still cautiously optimistic. So it looks like the worst is behind us, and some of the optimists are looking forward to the future again. So, as per my previous expectations, we are still trading within the range of the gold price of $11.80 and $14.20. Right now, we're comfortably hovering around the 1300 level, which is quite good compared to approximately a year ago. So, and as the summer months are usually relatively quiet, I think this won't change anytime soon. So I think we'll stay within the trading range for the gold price. And as I said at PDAC to you, I still fail to see any catalyst which might actually be very helpful to get the gold price to break out again. So the next few months and quarters will be very important for that because right now we're trading at some support lines. So it will be interesting to see whether or not a catalyst will occur. And additionally, if I can just continue on that, Sonny,
yes.
It looks like the flight to safety and yield hunting is still continuing, both in the US and in Europe. So when you see that the US Treasuries auctioning new bonds, you see there's a massive interest in it. And it doesn't stop there. I mean, if you look at the corporate bond scene in, for instance, Europe, there are Belgian real estate companies which are able to place bonds for a maturity term of 7 years at a 2.2% net coupon. So it's dirt cheap because there's a big appetite for yield in Europe right now as well.
Mm-hmm. I mean, I guess recently what you're pointing to is the recent Treasury Department where they managed to get investors to submit, 3.4 trillion of bids for the 1.1 trillion of the notes and bonds that were sold this year. Now, so what was the amount in Europe that you mentioned?
It all fluctuates a bit, Sonny, but you can really see the ratios of interest versus offered amounts hovering around 2.5 or 5. So it's usually in the same bandwidth. So they're usually 3, 4, 5 times oversubscribed. So it's there's a lot of appetite for bond instruments right now.
So before lead in to and we expand on investor sentiment. I mean, why is there interest in these raises of debt by is it by retail or is it by institutional investors? What is it?
It's a mixture of both. There's a lot of institutional investors getting in as well because it still is one of the safest asset classes there is. And compared to 2 years ago or 3 years ago when everybody was thinking the eurozone would fall apart, I would say that those fears have eased a bit and people are trusting. Well, trusting is not a really good word, but seem to trusting the governments again with their money. And if you, for instance, look at the latest bond auction of France. It was actually the Japanese institutional investors which bought about 50 or 60% of the total offering. So there's a lot of interest in yields or corporate bonds and sovereign bonds from all over the world, both from retail and institutionals, because it's one of the safest asset classes there is still.
Mm-hmm. Interesting. Okay, well then that leads to my next question. With that amount of interest, you see that the EuroZone growth in April, only increased by 0.2%. The prior quarter, it increased by 0.3%. And now Christine Lagarde of the IMF forecasts that the eurozone will be cut again due to its weakness. So is the eurozone
Mhm.
slowing down, or from what you're saying with with the interest in the amount of debt out there, it's being oversubscribed. So what is going on?
I think it's actually all tied to each other because people are scared to spend the money. They want to go into safety and buy the bonds. So, but let me just state the obvious. I think the eurozone actually never really got going after the global financial crisis. So, whilst the US economy, for instance, was picking up quite fast and picked up a lot of steam, the eurozone encountered a lot of, let's say, internal difficulties in 2011 and 2012, and it took actually quite a while to straighten those issues out. So if you ask me, I'm surprised. No, I'm not surprised because the growth rate in the eurozone is much lower than across the pound than in the US.
Mhm.
So to come back to your question, are we slowing down? I guess we actually never really got going.
Okay, interesting. So do you think that over the next few quarters, what do you foresee then? Do you think that it will just be that kind of lagging growth, or what is your opinion?
Well, it's also important to note the differences inside the eurozone. So you've got the southern economies like Spain, Portugal, Greece, and Italy, which had to digest huge decreases in their GDP. But I'm actually relatively optimistic for those countries because the third quarter of any calendar year is actually their top tourist season. So if there's something which will be able to get them out of their misery and get them going again, I think it will be tourism. So
Mm-hmm.
I'll actually be looking forward to see the numbers of the economic situation in those southern countries in this quarter. So I think it will be very interesting to watch those, and especially the creation of jobs in the tourism sector.
Okay, interesting. And so let's move on here to the health of the financial system in the eurozone. We touched on
Mm-hmm.
it already. Now, it was I think it was about a week ago where the Espirito Santo International Bank in Portugal, they were unable to pay back bank bonds, and they were undergoing an audit. And I just want to see what your thoughts were on that particular bank and what actually happened there.
Okay, so the problem is, Sonny, there's a lot of misunderstanding in the market because it was not the bank who defaulted on the loans. It was actually the bank's largest shareholder, which defaulted on the bank loans to Espirito Santo. So both companies have the same name, and it's indeed the 25% owner of the Espirito Santo bank which caused the problem. So they could not make a payment, an interest payment on the loans they got from Banco Espirito Santo. So that got a lot of bells ringing because let's put it this way: if Espirito Santo has a total exposure of 1.1 billion in loans to these so-called subsidiaries or partners, which are actually the main shareholders.
Right.
So the problem in Portugal and specifically with the Espirito Santo Bank is that there's a lot of intertwining, and it's just a big mess over there, Sonny. It's a big mess, and nobody really knows what the total exposure is right now.
So is this good or bad? I mean,
Well, it's good that it's not the bank itself which is defaulting on the loan because it would be quite disastrous. But the fact that they are on the hook for 1.1 billion of the loans to the main shareholders is that's obviously not a good fact to have, right? So the thing is, they according to the regulator, the Banco Espirito Santo had a capital surplus of 2.1 billion.
oh,
So
okay.
theoretically, they should be capable of surviving a 1.1 billion loss in
Hmm.
case they would have to write everything down to a value of zero. But the main problem, excuse me, Sonny, but the main problem here is the fact that Banco Espirito Santo has also invested some of its clients in the debt of those Espirito Santo International Group. So the problem is, and the main question here will be, did the bank warn their customers about the financial risks and the intertwining of the bonds they were selling to them? If that's the case, if they warned everybody what the intertwining was, then I don't see a problem.
Hmm.
However, if they did not talk about it, then there could be some lawsuits from those people or companies who invested in it without knowing the full extent of the loans and the problems they were getting into.
So
So then, yeah, go ahead, Sonny.
no, I was just gonna say. So with that in mind, what is the next step now for the bank? I mean, I'm assuming there's obviously an investigation going forward right now. What are their options, I guess? So what's the next step?
Well, if the loss remains limited to 1.1 billion, then the banks should actually be fine because they had a capital surplus of 2.1 billion.
Right.
So the main problem is whether or not the customers who bought the bonds on their advice will sue them. But even in that case, I mean, those are lawsuits which will go on for years and years and years. And meanwhile, the bank should be able to build up its reserves again before eventually, maybe, potentially having to pay out damages. So I think right now it's business as usual. But let's take the obvious here, Sonny. It's not a good thing to suddenly discover 1.1 billion potential loss on your books.
Oh, of course. I mean, that's definitely not a good sign, especially to the markets. I mean, it definitely did jolt the markets quite a bit. So my next question is leading from here is, is there a possibility that there are some other banks that are, in a similar situation, of being liquidated or just being in a similar situation, I guess.
I don't think so because most of the banks have really cleaned up their shareholder structure. And the problem with Banco Espirito Santo was the fact that it was still the family who founded it 120 or 130 years ago, which was still running the company. So the CEO, which was a family member, has now been removed from his position, I believe, a few days ago or last week. So there should be a new, fresh wind blowing through the boardroom there, with more neutral people heading the company. So I hope that the effects will remain limited to a maximum of 1.1 billion.
Mm-hmm.
But according to Citigroup, the total bill could be 4.3 billion if they have to repay all the bondholders who they might have ill-advised. So it's going to be somewhere between 0 and 4.3 billion euros.
Interesting. Well, I guess we'll wait and see in the next few weeks and see how the story develops. So, from what I see as well, I mean, even though the growth rate slowed, marginally here, there's some good news to the Eurozone. I mean, the unemployment rate decreased to 11.6% from 12.1% when we spoke in March. So, why do you think this is that given consumers are spending less and the growth rate has decreased? What is fueling that, that unemployment rate to decrease?
Mm-hmm. Well, Sonny, first of all, unemployment rates are actually based on the guidelines of the International Labour Organization. So this means that the numbers are based on the group of people between 15 and 74 years old. So another thing is that the big kicker that in the order to qualify as unemployed, you need to be able to start working within 2 weeks, and you must have actively sought employment in the 4 weeks before. So as you can imagine, it would actually be quite easy to tweak the numbers a bit with the 2 week and 4 week rule and the definition of being actively searching for work. Mm-hmm. So additionally, another problem is, well, it's not a problem, it's more like an issue. If you're employed half-time, or even just a few hours a week, you will not be counted in the group of the unemployed. So if someone was unemployed but now has accepted a job working, let's say, 10 hours a week, that person will no longer be counted as unemployed, even though he doesn't make enough money for a living. Mm-hmm. So I think the unemployment rate went down mainly, I would say, because of the previously unemployed people who were hired on part-time contracts, which actually removes them fully from the statistics.
Mm-hmm. So again, I guess going back to this question, is this good or bad going forward?
I personally don't see any noticeable difference, but as you said, yeah, well, the unemployment rate dropped by 0.5%, but I think it's still mainly felt in the worst economies of the Eurozone, like Spain and Portugal and Greece. So over here in West Europe, it's I would say it's business as usual. I do not see a sudden increase in unemployment rates here.
Interesting. Okay, so let's move aside now to a different topic. I came across this where the Italian presidency of the Euro Council, Mr. Matteo Ranzi, is putting forward an initiative called the Digital Economy. Can you explain what this is and why they are discussing this type of idea for the Eurozone? What is so significant about this?
Okay, well, the digital economy is actually something which came up quite a while ago, so it's not really Renzi's idea, even though he would like it. So the thing is, the European Union has now recently reiterated its ambitious plans to actually, you could consider it digitalizing the society. So it will mainly be about focusing on e-identification and, for instance, e-invoicing to make trade relationships across the borders of the member countries more easy. And it will actually be very beneficial for transactions between any counterpart of who are located in any part of the eurozone.
Mm-hmm.
So, but there's a problem, and well, there's a downside to that as well, Sonny. Even though everybody's obviously a big fan of simplifying the mess we could create with all the paperwork, um, I think it also increases the possibilities for government to act like a big brother. If everything is digitalized or is aimed to be digitalized, how difficult or how easy would it be for government to find all those details and all those so-called trade secrets and what's not? So digitalizing and promoting digitalization could be good, could be really good, but I would first of all like to see a very strict regulatory framework around the digitalization, so to ensure that there's sufficient protection for everybody involved. So it's a good idea, but it needs to be worked out a bit more before I'm a big fan of it.
So, to your knowledge, I mean, how far has it really gone forward? I mean, are there some?
Oh, not at all, not at all,
Oh,
Sonny.
okay. So
No.
there's no test markets or anything where they tested some kind of infrastructure. It's just an idea right now.
Exactly, it's one of those ideas which they are actually putting a test balloon up to see how people will react. So it's going to take a while before it could get implemented, and they are targeting it to start, well, not a start date, but to get it really up and running by 2017, 2018. So it's still a few years out because they still need to attract the IT people to be able to structure all those ideas. So I don't think it's something for the near term, but it's something we will have to look at for in let's say a time frame of 5 to 7 years from now. And by then, I hope there will be some kind of strict regulatory framework in place.
Mm-hmm. Interesting. Okay, and actually, I wanted to circle back to the question regarding when we were talking about the debt raises. One thing I wanted to ask is, are foreign investors in Europe actually looking at purchasing U.S. debt? Is that of interest to them, or are they just strictly kind of staying to just European debt?
I think everybody's going where the yield is.
Okay.
When you look at what the European sovereign bonds yield, and it's terribly low. So people go to, I would say, more exotic regions, which indeed have a currency risk like the US or the Australian dollar.
Mm-hmm.
So, but the money is going where the yield is and where the risks are perceived to be the lowest, even though that even the high yield bonds like the what would I call it? Almost the junk bonds
Mm-hmm.
are having a very low yield as well. So let's go. Let's put it this way, Sunny. There's so much money available, and people want safety right now. So it's not just going to the share market and the stock market, but also to debt. Even though your yield is between 1.5 and 2.5% even on the longer term bonds, people are still buying it because they want the safety.
Right. Interesting. Okay, so I guess the let's end off where what is your outlook for Q3 and Q4 of this year in for the eurozone?
Well, I don't think we'll see a lot of changes. I think we'll just continue with a growth rate of between 0 and 0.2, 0.3%. So, as I said before, I will be very interested to see how the southern economies picked up in the third quarter of this year, because I truly believe that tourism will be a big factor for them. So I will be mainly focusing on how those countries are doing instead of looking at the general eurozone. Because let's face it, the main problems are actually caused by some countries and not by all of them. And it would not be fair to just look at the general eurozone, but it's some of those countries who really warrant some more attention. And that's going to be very interesting when those numbers and statistics will be out.
Interesting. Okay. Well, thank you so much, Thibaut, for joining us on this call. If you do want to get in touch with Thibaut, you can visit CaesarsReport.com. We will be finding, we will be providing the contact information for him, and you can ask him about his coverage reports as well. Thibaut, thanks again, and we'll look forward to an update in the next 2-3 months here.
Thanks a lot for having me, Sonny. Thank you.
Thank you.